Welcome to Money Talks. I'm Cathy Yang, your intel on the Philippine markets and the economy. In the headlines, U.S. President Trump urges Capitol Hill to unite behind his signature tax cut legislation. A potential U.S. recession driven by Trump's tariffs is one of the biggest risks for Philippine markets. Kyle Garcia, equity research analyst of First Metro Securities, tells us why. And Philippine consumer loans are growing at a faster pace than overall loans. What does it mean for the credit markets? We speak with Peter Faulhaber, President and CEO of TransUnion Philippines. U.S. President Donald Trump urged Republicans in Congress to unite behind a sweeping tax cut bill. In a closed-door meeting on Capitol Hill, he told House Republicans not to push for more changes, especially on Medicaid. Trump reportedly warned them not to mess with Medicaid, referring to efforts that would restrict access to the program for low-income Americans. He also discouraged carve-outs for state and local tax payments, an issue crucial for moderates from high-tax states like California and New York. The bill extends the 2017 tax cuts and adds breaks for income from tips and overtime. Analysts warn it could add up to $5 trillion to the national debt, which already sits at over $36 trillion. But Trump did not convince several lawmakers. Maryland Representative Andy Harris said the bill is not enough as is and wants deeper Medicaid cuts. The bill remains at risk as Republican leaders try to rally enough support.
I think it's the most important bill this country just about has ever done in terms of size and scope. That's why we call it the great, big, beautiful deal. Biggest regulation reduction in history. Incredible for Medicaid, for Medicare. The only thing, we're going to leave it exactly as it was, other than for obviously waste, fraud, and abuse. We're strengthening it. We're going to make these things even stronger. The Democrats are going to destroy Medicare, Medicaid, and Social Security. And we're going to keep them, but even make them stronger.
Federal Reserve officials say higher prices are coming because of rising U.S. import tariffs, with the open question of whether the inflation shock will be short-lived or more persistent. Atlanta Fed President Raphael Bostic said businesses have been front-running tariffs by building up inventories, but those strategies are starting to run their course. Bostic says if that is the case, price changes are coming, and they will see how consumers respond. Bostic now expects just one rate cut this year and a long wait for clarity. White House advisor Stephen Miron pushed back, saying tariffs would not cause meaningful inflation. St. Louis Fed President Alberto Musalem warned that assuming these effects fade quickly could lead to more inflation problems. For its part, the Fed is saying it is not rushing any decisions until the full impact of tariffs becomes clear. China has cut its benchmark lending rates for the first time since October. Major state banks also lowered deposit rates as authorities try to ease monetary policy and cushion the economy from the U.S.-China trade war. The reductions were mild, reflecting a cautious approach to easing as policymakers navigate trade tensions. The People's Bank of China cut the one-year loan prime rate by 10 basis points to 3%. The 5-year LPR, which affects mortgage rates, was also lowered by 10 points to 3.5%, both now at their lowest since the 2019 reform. Right after, China's top state banks announced deposit rate cuts between 5 to 25 basis points. These cuts are expected to guide smaller banks to follow. Australia's central bank has cut interest rates to a two-year low of 3.85%. The Reserve Bank of Australia says easing inflation gave it room to respond to rising global trade risks. The bank trimmed the cash rate by 25 basis points and left the door open to more easing ahead. RBA Governor Michelle Bullock says the board debated whether to hold, cut, or go for a larger 50-point cut. But she did say the global outlook, especially after Trump's April 2 tariff move, remains very uncertain. Bullock noted they got space to move, quote unquote, quickly if needed. Markets reacted fast as they expected the cut. The Aussie dollar fell by 0.5%, and bond futures rallied. They now see a 60% chance of another cut in July. Trade between the European Union and the Philippines grew by nearly 4% to over 16 billion euros in 2024. Minister Counselor and head of the Economic and Trade section of the EU delegation, Philippe Dupois, said EU imports and exports from the Philippines grew by over 3% and nearly 5% respectively. He also said electronic products remain the main export of the Philippines to the EU in terms of value at over 6 billion euros in 2024. Philippine exports to the EU include nearly 3 billion euros worth of goods admitted under the EU Generalized System of Preferences Plus or GSP Plus scheme, bringing the country's utilization rate to a record high of 80%. The Philippines and the EU are negotiating a free trade agreement, which is set to improve on the market access provided under GSP Plus. The parties are set to hold a third round of negotiations for the FTA next month. And U.S. stocks have slipped, halting their recent rally as doubts resurfaced over easing trade tensions and cooling inflation. The Dow fell by nearly 0.3%, and the S&P and the Nasdaq both fell by about 0.3%. The benchmark 10-year Treasury yields have inched up slightly to 4.479%, and gold prices have closed at $3,280 per troy ounce. As for U.S. futures, the Dow falling by less than 0.1%, while the S&P 500 is down by about the same, along with the Nasdaq, portending a lower open when the markets start trading tonight, Manila time. Let's take a look at the Asian markets, see how they're doing in the first hours of trade. Australia's ASX 200 up by nearly 0.5% after the rate cut. Kospi Index up 0.9, and Japan's Nikkei 225 sliding by 0.2%. Let's get a quick check on the Philippine markets. The Philippine Stock Exchange opens this Wednesday higher by about 0.1% at 6,343. The stock market closed yesterday, Tuesday, lower by nearly 2%. As for the Philippine peso, it opens today at 55.58 to the dollar. Peso closed yesterday slightly weaker, 55.63 against the greenback. And for this briefing, our guest says the biggest risks currently looming over Philippine markets are a U.S. recession driven by tariff shocks, a potential negative reversal of trade talks, and U.S. protectionist policies. With us now for more is Kyle Garcia, Equity Research Analyst of First Metro Securities. Good to have you, Kyle. Thank you so much for joining us.
Of course. Thank you for having First Metro Securities.
It's quite a mouthful, isn't it? And it's quite toxic when you come to think of the confluence of all three. What are the chances that the confluence of all three is more likely? Or is it less likely from the time this year started? We got Trump going with the tariffs.
Got it. So far in the past, as the start of the year, we weren't really pricing any of these things. But when Liberation Day came, it seems like more and more of these things are starting to confide into each other. But so far right now, the U.S. markets is pricing in about a 38% U.S. recession. So still unlikely, but so far, hopefully it doesn't happen.
Do you agree with that? 38% or a little bit higher?
I'm not sure about the numbers, but I think it's well in line. We're really afraid of that. So for our end case target, for our bear case target of about 5,800, it's really that U.S. recession that we're pricing in terms of that higher equity risk premiums.
True, but I'm looking at the bond market and seeing whether there's a potential for decoupling. Because when you take a look at the longer end of the Treasury, yields have punched up beyond 5%. And on that day, overnight, our own T-bills ended mixed.
Yeah.
So some of the bond analysts out there are saying there must be a decoupling happening, that we're moving far away from whatever could happen to the U.S., which could be a recession.
Well, if you look at the credit spreads locally, it's mainly locally driven. There's a lot of supportive data that could really help us bring credit spreads lower. The inflation has gone down below target, 1.4% recently. And with the peso strengthening, we think that the BSP has a lot of room to cut rates. And if you look at the bearishness on the long end, this seems to be more so on the supply end. The BSP just issued the 10-year and 20-year, so we think that's why we saw some uptick in the yields.
Right, and it did pretty well, the 10-year.
Yes, definitely. So I think, as the BSP cuts more, we think that we're more bullish on that credit on the credit space.
But how much more, though? I mean, we've heard the Fed. They were supposing maybe 4 rate cuts, but now they're maybe saying 2, and now
Yeah.
I just read maybe just 1.
Yeah.
Could there be a decoupling as well? The Banco Central having more room to decide on its own whether or not the Fed cuts a little bit more or a little less?
Yes, I think the decoupling over the past or in the current term is that we're really looking at the peso, and with the peso strengthening right now, we think that there is room to cut ahead of the U.S. Yeah.
Your peso exchange rate forecast then has got to be somewhere in the area of what? Because right now it's at 55 to the dollar.
Yeah. So for our DBS partner in Singapore, for our end peso 2025, we're around at those levels already, about 55.5 pesos. So we think that at current levels, this is already fair value.
What about for companies? As we've seen the first quarter earnings season roll in and seen inline expectations, yes, but maybe challenge for some industries like telco, power?
Yes, definitely. Well, as you mentioned, telco, there have been winners and losers. We saw Converge have strong results, which may be taking some market share. But so far, in terms of first quarter earnings results, a lot of these things were in line. We have seen some winners and we have seen some losers, but overall in line with our expectations. And in terms of our stock picks, we have transitioned from earlier the year. We think that since there's a lot of risk in the market right now, we're looking at dividend players.
Such as?
Well, you have a lot. So our benchmark right now is the 2 years, since we have that 12 to 24 months of bear case for the U.S. or that U.S. recession case. So those stocks that have higher yield against the 2 year is you have A-REIT, M-REIT, RCR. You also have some consumers like Wilcon and RHI, which their yields have also gone up.
Right, consumer place then. I mean, this is the theme, overall theme. But when you look at the property market and you find that there is an oversupply in condos in the NCR, how can you kind of avoid that when you want to invest in maybe a REIT?
Yeah, of course. I mean, REITs, if you look at the potential downturn in the U.S. market and then in the Philippines following that, we think that REITs could offer some stable returns if we see some downtrend in the Philippine market. So again, if you are looking for that potential stable returns, you invest in A-REIT, M-REIT, RCR, which have competitive pricing against the US 10-year. I think RCR right now is about 6.3, 6.6%, which is pretty attractive already at current prices.
Consumer theme I get, but then when I look at the cumulative inflation over the past 3 years, it's still at record highs, even though we're already looking at inflation month on month at least 5-year lows.
Yeah.
So what's the justification for investing in more consumer counters?
Well, some of our consumer names like Pure Gold and Wilcon have good yields already. But what we want to see is, yes, inflation has gone up over the past few years. But what we want for that to happen is it to be more stable so that real income can catch up. When real income catches up, we can see consumer spending to improve. And then that's when you see that broad-based spending affect the markets and turn into better income for our consumer names.
Now I'm seeing in your notes gaming. What's the attraction there?
Well, if
or
you
is
look,
it like a red flag?
Yeah, well, if you look at gaming, it's really two sides of the coin, right? You have land-based casinos and the online gaming. Well, one side has fared a little less than the other because there has been some problems in the VIP segment, with the China crackdown. That segment hasn't been that attractive so far. But if you look at the online gaming, really the most attractive space in the market right now. But we think that it could see some peaking in the near term. In the data so far in first quarter for the online space is it was flat quarter on quarter. But we think that it still has some legs. Election spending, lots of money going in the market. So it could potentially go into that direction on online gambling. So, yeah.
Now, there's a rebalancing coming, but not in the near future. But it's something that you're watching out for in August.
Yeah.
How come?
Well, we think that this rebalancing is quite unique. We released a report. It's called Changing of the Gaming Guard. So Bloom was included in 2023. But right now, with the recent downturn of Bloom, and with Plus going up, we think that one of the criteria was market capitalization, and it seems like Bloom will be exiting the index, and Plus is entering. So it's really changing of the guards.
Pretty exciting
Yes,
then. So we'll
of
watch
course, yeah.
out for that. Thank you so much, Cal.
Thank you,
Appreciate
Cathy,
the
for having
views
me.
and insights. Cal Garcia there of First Metro Securities. And you're watching Money Talks. Coming right up, the Philippines places 64th out of the Global Startup Ecosystem Index. And Google's AI mode option has been released in the US. Keep it here on One News. Welcome back to Money Talks. I'm Cathy Yang. The Philippines ranked 64th out of 100 countries in this year's Global Startup Ecosystem Index. The country's rank dropped 4 spots from rank 60 last year. This is the 4th consecutive year of Philippines declining in the ranking. By city level, 8 Philippine cities managed to enter, with Manila at 112th place, dropping 11 spots from last year. Global research firm Startup Blink says despite standing as a Southeast Asian fastest-growing digital economy, the Philippines' lack of infrastructure limits its economic growth, making entrepreneurs struggle with slow regulatory support for their startups. Philippine banks' combined net earnings rose by over 10% in the first quarter. That's according to data from the Bangko Sentral ng Pilipinas. The banking industry's net profits grew to nearly 102 billion pesos in March from 92 billion last year. Interest income also increased by over 11% at nearly 400 billion pesos, while the non-interest stood at over 60 billion pesos, 14.5% higher from last year. Economia Advisory Reniel Matereses says faster loan growth this year may have driven higher income growth for banks. Analysts believe telco companies may deliver mixed results in the second quarter as operational costs and competitions rise. Global Link's sales trading head, Toby Alan Arce, says increasing demand for digital connectivity will drive remote work, thereby boosting revenue streams of telcos. China Bank research associate Andre Soriano, however, believes mobile and data revenues may remain pressured as discretionary spending continues under economic uncertainties. In the first quarter, Globe Telecom posted nearly 3% profit increase, while PLDT's attributable net income fell by 8%. The insurance industry premiums increased by over 14% to 124 billion pesos in the first quarter. This led to a 7% increase in the industry's net income, with over 8% rise to its net worth. Total paid-up capital and guarantee fund also went up by nearly 2% to 86 billion pesos. Insurance's combined assets now expanded by over 4% to 2.4 trillion pesos in March. Liabilities also increased by 3% to nearly 2 trillion pesos, while benefit payouts or losses incurred inched down to nearly 39 billion pesos. Meralco's power gen is nearly halfway in the completion of the M-Terra solar power project in Nueva Ecija and Bulacan. The 200 billion peso project is expected to be the world's largest integrated solar, photovoltaic, and battery energy storage system facility. Developing a 4,500 megawatt-hour energy storage system will supply clean electricity to approximately 2.4 million households. 700 megawatts peak of solar panels are targeted for installation in July. MGEM President Manuel V. Rubio says they are on track to complete its first phase in the first quarter of next year. For more business stories, check out Business World online. Philippine consumer loans are growing at a faster pace than overall loans. An increase in credit card loans, motor vehicle loans, and salary-based general-purpose consumption loans are fueling that growth. So what do these all mean for our credit markets? With us now for more is Peter Fall-Haber, President and CEO of leading global information and insights company, TransUnion. Good to have you here, and congratulations, Peter, on your recent posting.
Thank you so much. Pleasure to be here.
So that's 3 months into the role and
That's
6
right.
years of Philippine banking experience via
That's right.
HSBC. What are you seeing in the consumer appetite for credit?
Well, as you alluded to in your opening, bank lending continues to grow. And that's both supply and demand. So banks are looking to lend more. They're looking to get more Filipinos into the formal financial credit system. And Filipinos are also looking for ways, to borrow money. So whether it's for a salary loan or whether it's for education or even travel, the demand is still quite strong.
And that's all happening as we're seeing the global policy uncertainty unfold and midterm elections to boot. What impact might those event risks have had in the propensity to embrace credit?
Sure. So what we're seeing at TransUnion, and just for your viewers, TransUnion is a private credit reference agency, right? So our goal is really to enable trust between borrowers and lenders so that they lend prudently and borrowers also borrow prudently. We're really seeing quite positive sentiments, actually. We recently launched a credit perception index where Filipinos have a more positive view of credit than they did in 2023. Now, that's actually a unique survey that we launched first here in the Philippines. And soon, hopefully, we'll bring that to more countries.
Yeah, I was just trawling at the CPI, the survey that you mentioned. I wanted to show it on the infographic, the current attitudes and how they're shifting with their preference, given the inflation concerns.
Yeah.
And month on month, I did make a mention that inflation is tapering off to at least 5-year lows. But
Yeah.
then when you look at cumulative inflation, it's still at record highs. So what impact do you think this is having on their want to actually seek credit or a loan?
Sure. Well, our Filipino customers tell us that inflation is at the top of their list in terms of the concerns that they have. So not only do we have the credit perception index, we also have the consumer pulse survey where some of those sentiments are coming out. So even though inflation is at a 1.4%, I think in April at a 5-year low, the concern about rising prices is still at the very top of Filipinos' lists.
Right, but then it's interesting also when you take a deep dive at what we're seeing right now on screen, the expected spending increase.
Yep.
So Filipinos are spending on clothing and electronics
Yep.
to the detriment of dining out, entertainment, travel, white goods, and digital services like Wi-Fi connectivity. I mean, I can't live with Wi-Fi.
Yeah.
Cannot. But then they're spending less on that. I mean, what can you draw out from these findings?
Sure. So as you can see on the graphic, I think in-store and online retail shopping is going to grow quite rapidly. I think that speaks to the certainly the rapid digitization of financial services that we've seen certainly in the last 6 years that I've been here. I think key especially for Philippines is 70% of the GDP is consumption, right? So every time you go out and about, the malls, restaurants, it is still quite busy. We still have a few months to go until the Burr months start, and I'm still quite confident that the spending will continue to fuel growth.
Right, consumer attitudes is just one because there are other metrics that the survey tracks and pretty interesting. Included in that is knowledge, trust, favorability, and future receptivity.
Yeah.
So when you compare us with other ASEAN nations, how are we doing then?
Yeah, I think, we'll be able to deep dive more on the survey in the coming weeks. We'll do a formal launch of it also, I think, which would be quite interesting for your viewers. The Philippines has a ways to go, I think, in terms of the credit perception as well as education. So while it is increasing, there is still a negative perception around credit and borrowing. And so what we try to do at TransUnion, and we don't lend money, we're not a financial services company, is we try to help our customers, which are the financial services companies, lend prudently to consumers, right? At the right rates, with the right limits. Similarly, help educate those consumers on what's the right amount to borrow and why, the importance of credit scores. So I think that education still is a way to go, but it's a really big focus for TU in the Philippines because we really want to help financial inclusion and really get more people into the formal financial system.
Especially when there is access, because that's one of the findings as well, that Filipinos have gone into the buy now, pay later scheme because it's so out there, it's so available. So how do you change the mindset then that borrowing is one, paying is another, as you say prudently?
Yeah, so and the graphic on buy now, pay later, shows that the top reason for Philippines is it was easy to apply, right? But I also think that the buy now, pay later product fits great with how Filipinos shop, love installments, love to split purchases into more than one payment. So I think the product fits quite well. I think the prudent thing is for BNPL, it's how do we make sure that that the lenders, right, have the right data around the right consumers, so that customers are not, unknowingly taking out too much debt, right? That they're not unknowingly buying for things that they can't afford. And that's where the data and insights of where TransUnion comes in, because we want to make sure that the country grows and consumer growth, spending growth is a great way to do it, but it needs to be done prudently by both the lender and the borrower.
Just as a final point, Peter, because the other side of credit really is paying it back prudently. Yeah. With the Bangko Sentral reducing rates a lot more towards the end of this year, what are the risks then of household debt ballooning, mirroring the problems that Thailand and South Korea face?
Yeah, sure. So with rates coming down, it should make actually borrowing a little bit cheaper, right, as banks reflect that in their pricing. So if that flushes through the system, then it should actually be a little bit cheaper for Filipinos to borrow. Now, the risk, as you point out, there is we need to be able to repay that regardless of the amount, right? And that's where we can use really targeted data, so the banks are lending the right amount at that lower rate, which then makes it easier for consumers to actually pay it back. So I think that's probably the best way for us to manage it.
Great. Looking forward to a deeper dive on the data. Thank you so much, Peter.
Thank you, Cathy.
Appreciate it.
Pleasure.
And Peter Faulhaber joining us here, the President and CEO of TransUnion. An AI mode in Google's search engine has been launched in the US. This feature embeds chatbot capabilities into the search bar to give users an experience of having a conversation with an expert. Google head of research Elizabeth Reed said that this is their most powerful AI search, able to tackle any question and more complex queries. The AI mode was made available in the US Tuesday, appearing as a new tab next to the search bar. This is part of the tech giant's push to remain competitive against other AI services, which threatens their dominance in online search. And that includes Microsoft-backed OpenAI's ChatGPT. And that's it for Money Talks. I'm Cathy Yang. Catch us again tomorrow, 9:30 a.m. here on One News. We're also streamed live on YouTube and on our Facebook channels. Have a great day ahead.